What's going on, everyone? All right, here's another trade recap. This is for Monday, April 21st. I had a good one today, but it wasn't really the trade that I wanted, but it was still good. There was a good read. Everything looked good. And I had a good target. So I just really get into that. And I'll actually want to show you how I draw deviations out. So that'll be a good one to where you can see how far price is going, could potentially be going. And this has been a very accurate thing for me. So, you want to hang around, check that one out, but I'll get into that here in a second. I like to start with this weekly chart. All right, especially today's Monday. So I want to see, as you know, where could it likely go on the weekly chart, right? So immediately, I want to point out this, and I've been marking this one out for y'all here lately, pretty often, this weekly volume imbalance here, right? Because we had this weekly volume imbalance, we came down, we ended up closing up, but what did we do? We hit that weekly volume imbalance right here, and then the following week, we closed down, right? Which was last week. So if I'm looking at this, then I have reason to believe we're going to keep going down, right? Like that's on the weekly chart. I'm bearish because we haven't had a shift to the long side, like back up to the long side, right? We took these lows over here to the left. We took these swing lows and we're just coming down and we retraced right back up into this volume imbalance. And then now we close down. So why would we just stop right here on the weekly? I don't really have a reason, right? So it could potentially come back down all the way down to this weekly low down here. We'll see if that happens or not. But right now, I don't have any reason to believe we're not going to continue down. That's from the weekly. If I go to the daily chart now, same thing. This is the volume imbalance here that I was marking out and I was talking about over the last couple, few days, a week or so. We have this, which is also a fair value gap here. But if you look, price came down, right? Shot all the way back here on that one day that we had 1,000, 2,000 point run up, 3,000, whatever it was. Ran all the way right back up. But look at the bodies closing up here. Now, I've been saying this too, where I'm like, okay, I could see price potentially reaching these equal highs up here, right? Right up here. But it all depended on what happened in this volume imbalance for me right here. Do we stay here and go up or do we go close down? So as you can see, obviously we closed down. So now that we're coming down, I don't have, I'm going to be watching these lows down here, right? I'm going to be watching this swing low and this swing low. We could reach back down there. We could. So what I'm going to be looking for now is we have this fair value gap, which includes a volume imbalance right here, right? Like if you see that volume imbalance right here, which is a fair value gap, we have that. And then we have a bit of a volume imbalance right here as well, right there between the bodies. And then this is Tuesday already. So this was Monday because I'm doing this in the evening, right? So this bar is open, but before this bar, this is the current day on Monday. All I'm really looking at is right now I have this little swing low right here. This is what I was looking at on the daily chart. This swing low. So I'm looking at, okay, do we sweep this swing low and want to come back into this fair value gap? Or are we going to just keep running down first and then come up? We don't have to come into this volume or this fair value gap. Typically, when you have a volume imbalance, though, I've mentioned this before, price typically don't run away too far away from a volume imbalance before coming back to it. So I would not be surprised if we come back up to it at some point before running these lows here. So, but I'm still bearish on the daily chart too. I don't have a reason yet to not be bearish because we don't have any market structure shift. We have this swing up here, Then like I said, we have these relatively equal highs right here. Then above that, we still have, we have this one up here. So I don't have a reason yet to say, well, we're going to be bullish. Even though I do have to remember in the back of my mind that at any point we could retrace back to here. And then once that happens, that's where I'm waiting to see, do we continue up or do we push down to go underneath these lows now? So that's basically what I'm going to be looking for. But in the meantime, I've got to be bearish. Okay. So then I'll drop down to the 1 hour. And the 1 hour this morning didn't really have a lot going. We had, this was 7 a.m. This is the 9 a.m. bar. So really all I had was a little swing low right here. Little swing low that I was looking at as a potential sell side liquidity. And then we really had just this swing high up here. Little swing high. I wanted to see what price did there in this area. And really I wanted to see how it lined up with the 15-minute chart. We had a little 1 hour fair value gap in here, but then I went ahead and marked out this one right here. But if you look, how did price react though? Like price came back, took this swing low right here, right? Leaving this fair value gap. And then it came back up into it and then took this low here as well. But look at the bodies. Look where the bodies closed, right? So it looked good. I didn't really need price to go up any higher. Like it could continue down. So this 1 hour pretty much aligned with my bearish daily and weekly bias. So now I'm going to go to the 15-minute and kind of see how that lined up. And this is what I had on the 15-minute here. Here's 9:30 here, right? So yeah, we had this low, no real fair value gaps or anything in between. So I was like, well, that looks good for the sell side, buy side up here that I marked. Okay, I have all these highs up here, and at 7 a.m. it took all of this buy side here, right? Took that buy side here. And we also had this 15-minute fair value gap right there. So I'm like, okay, look at the bodies. Reached up, came down, and then what do you have? Took these lows after taking this buy side up here, leaving a fair value gap right there. And then what happened? Left this low, reached up to the midpoint, came back. And then here at the 9:30 bar, you can see it reached all the way up into this 15-minute fair value gap, all the way up to the high here, and then came back down, displaced down. Excuse me, I'm a little under the weather here today. I got sick over the weekend on Friday. But so yeah, at this 9:30, we reached up and I'm like, okay, there's really no reason for it to go any higher. There's really not. Like it's balanced up here. Like it looks like it can continue down. So I was really looking for a short all morning. Wasn't really, because even if it did sweep, I was looking at, okay, well maybe it'll potentially sweep here and then go up. But I'm like, there's really no reason for it to go up. So in that case, what I'm looking for at the open is it to go up and then look for a short to come down. Or if it does open and just come down here, I don't really have a reason to believe it's just going to sweep and come back up. I wait to see if that does happen, but a lot of times it's not going to. So let me go to my trading chart over here. All right, so here was my trading chart. So as you can see, here's the open, 9:30, and we did go up, but I don't need it to go, like, if it would have went straight down first to the sell side liquidity, then I would have waited for a pullback somewhere, right? But we opened and went straight up, and this is one of the times where I don't need it to run all the way up through buy side liquidity because it ran straight up into this 15-minute fair value gap. And then what did we do? We displaced down, right? Leaving some fair value gaps in here. We left our first presented fair value gap here. We left this one. And so that's where I was looking like, okay, we're going to go short here. It did as much as it needed to do going up. As you can see, it was a little bit volatile here. Came back up, reached this one. Now my rule is I'm not going to take a trade until 950. Right? I can't go until at least 950. When the 950 macro starts. So here I wouldn't have shorted, but then we came back down here, took this low. We created this fair value gap here, right? So this was a fair value gap. 1 minute fair value gap. Came up and we did not, so I would not have considered it long because here, this swing right here is where you would have a market structure shift. Let's get rid of this. So we would have needed price to come up through this swing with displacement to continue up, which I didn't really think it was going to continue up anyways. So when it came up, it failed to take that high, that swing high. Hit this 1 minute fair value gap again, which was this 15-minute fair value gap as well, just that big shaded area. And then came down here, right? And then came up, hit it one more time. This was where I would have liked an entry here. And the reason why I didn't take a short right here, one of the reasons was because of this big fair value gap. And I was like, oh man, I don't want to short here going straight into that fair value gap. Now you could have just shorted here at 117, took profit right here, but that's only like 20 points. That's not enough for me because my stop would have been bigger than that. So I can't take that. And I don't want to take it right into this because I just don't want to. Even though I feel like, this should become an inversion, I want to see it happen first. So then, yeah, it came down through it, created an inversion here, leaving this 1 minute fair value gap here. So I was thinking to myself, all right, and then I left this one here too. I was thinking to myself, well, as we come down, if we pull into, okay, let's get rid of this because this 15-minute gap wasn't here yet. If we pull back into this area, I'm going to go short. But as you can see, it never did. It just kept going down, right? Like, just kept going down, 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 down. I'm like, okay, at some point, it's going to pull back. And, excuse me, as we're coming down, my job now is to find where we could draw to. All right, so let's go back to the 15-minute chart real quick. As this is coming down, if you look left here, there was nothing on the 15-minute, because my chart was like this. There was nothing on the 15-minute chart to the left. So I'm like, okay, I got it. When that happens, I just go up a time frame. So I go up to the hourly chart, all right? And as you can see, we still had all this big, huge gap right here that we're trying to make our way down, right? So at the moment, price was like up here in this area, 9 a.m., 10 a.m. So it was like up here. So I'm like, okay, where could we go into? So when I went up the time frame, well, I have this swing low right here on the 1 hour chart, right here. So, okay, it could be drawing down to that swing low. And then if it goes any lower, well, we have the low of this fair value gap right here, this big 15-minute gap. So I marked that out as a potential draw somewhere in this area. So I was like, okay, now I have a couple levels I could target. So if I go back to the 1 minute here, I have a couple levels I could draw out. So now as it's coming down, I'm like, okay, here's that 1 hour swing low right here. And then the other one is much lower, way down here. So I wasn't fully expecting it to get to there. But then from there, because now it's after 10 a.m. and we're still just going down, I want to mark out the deviations. And this is where I was saying, might have a little golden nugget if you're not aware of this. So from 9:30 to 10 a.m., you have your opening range. Okay, the first 30 minutes of the market. 9:30, if you look at the bottom here, 9:30, 10 a.m., and you measure the high and the low of that range. So between those, right? So this is the high up here. and this is the low. So I mark that, the high to the low with a fib, right? And then I have deviations marked. So if you see, this is my settings here. I have, it goes to the minus 0.5, minus 1, minus 1.5, minus 2, and so on. And what this does, it's going to leave deviations out there. All right, so I measured the low here. Then you can see the 0.25, 0.5, minus 1, minus 1.5. And each one of those can be targets if you don't have any other targets. And so what I did that. All right, so now as it's coming down, let me pull this. Let me do this on another chart. That way I can show it both. 1 second. Okay, so as it was coming down, price was coming down here. This was 945. It left this fair value gap right here. Okay, so you can see that price was coming down, left this fair value gap. So I'm like, okay, price is going to keep pushing because it left that one. And then over here at 10:15, so we reached this 0.25 deviation, right, at 10, a little after 10. We came down, pulled up. We had a 5-minute fair value gap. And we had just created this 15-minute fair value gap. So let me show that one right there. So I'm always watching to see when a new 15-minute fair value gap forms also. Because if price just keeps going down, what I'm looking for is price to draw to something. And once it reaches something, pull back to something, right? So because I noticed and had these 15-minute fair value gaps here form, I'm like, okay, once we reach somewhere, right, some kind of key level, something, we're going to pull back potentially to one of these 15-minute fair value gaps. So it's typically what will happen. So now that you saw that, actually, let me put this 15-minute one back right here. There we go. All right, now I'm back to the 1-minute chart. Okay. So we had this one, and then we came down, took this 0.25. We haven't reached the 1-hour swing yet because that's this level down here. Then we came up, and we didn't pull back to this higher 15-minute one. And then we started dropping. And at this bar is when we created this 15-minute fair value gap. And then we took this low right here, leaving this fair value gap on the 1 minute. So I am like, all right, we hit this 0.5. We're likely, because with this, that 1-hour swing, we're likely to continue down, in my opinion. Because typically, when price expands out, it's going to go between the 0.5 to the -1 on one of those days where price just keeps going. So I was looking like, okay, if this 1 minute fair value gap here holds, then I'm looking to potentially short this either to this low or down to the -1, actually, deviation, because that's likely where it's going to go. So I shorted here. And as you can see, it came down, pulled up, and I'm like, okay, if we fail to displace here and take these lows, then I'm just going to go ahead and move to break even and let it do whatever it's going to do. Because at this point, I know it created this lower 15-minute fair value gap here on the fifth, right here. So if we fail to displace here, we're likely to pull back to the 15-minute fair value gap. Then I'll look for a short from there. And so what will happen, though, is if that does happen, then this will turn into an inversion, right? So I want to see it hit this 15-minute fair value gap, come back down, go through this inversion, leave a 1 minute fair value gap here, pull back into it, and then take a short through these lows here. So that's what I was looking for. And that's, as you can see, what happened. So here it failed to displace, came up, knocked me out at break even. I actually made 3 points on it because I like to cover, commissions and all. So then I let it run up here. Then I got what I was looking for in that fair value gap. And then you can see it closed down here, pull back up into here, shorted. And then I had my target down here, but then I ended up moving it back to the 0.25. As you can see, it hit the 0.25. And then slowly but surely, came down below the -1. And I don't think it got any lower than that. Oh, yep. It hit the -1.5. And that was it for the day. But yeah, so that's how you can kind of like gauge where price could be going if it just keeps going one direction. But I ended up getting out here. And you see it pulled all the way. Like if I would have left my stop in my original location, I could have just let this thing run all the way down to that -1 right here. But, I would have been in it for quite some time, almost an hour. And that's not really my normal setup anyways. So yeah, I didn't do that. But that was my trade there. So now let me show you what that looks like recorded here. Because see, here's where I was shorting the first time. I like that it held, so I went ahead and went short. Put my target down there. Put my stop right above this high, right here, this little swing high. And I'm not going to bore you with this one completely. Have my P&L over there. And it just failed to displace. As you can see, too, it also came up against me a little bit at one point. Right in here is a little bit negative. I really didn't think it would at this point close above this 1 minute fair value gap. However, if it failed to displace through these lows, that's when I wanted to move to break even. So I wasn't really too concerned about losing on this one. I thought I would probably break even, if anything, which that's exactly what happened. So when it came back down here, I was looking at this wick right here. Because you can see how the body, it reached down and then it closed up, right? So I was looking at the midpoint of this wick right in that area. And the body, of course, right here. If we can't come down and close below those, I was like, yeah, I'm likely to just, break even on this thing. So as we're resisting a little bit here, I believe I'll go ahead and pull my stop down at some point here soon. Fast forward it. There we go. Close down here, but you can see I'm right here, that wick. I'm like, yeah, so let me go ahead and pull my stop down. Popped up, it hit my stop, and then that's whenever I'm like, yeah, let me wait till it runs into that 15-minute up here on that pullback and see if we get a short from there, or if it runs into the higher 15-minute and get a short from there. That's what I was looking for. Because a short ultimately lines up with my overall bias anyways. So now let me fast forward it. We pull up here. I mark this as an inversion. So I want to wait to see it come back through and then short right in there. Came through. Now I'm looking here. Let's fast forward it. Get ready to go short as soon as we come back up into there. Well, I didn't have this marked. I didn't mark both fair value gaps here. But this is where I was looking at. This whole zone, both fair value gaps. So now I'm at the high here. Have my target at the low. And I don't remember if I pulled my target up here to the deviation when I saw it was having a hard time or if I closed it. I did one or the other. All right, so we'll keep going. And it at the same time. Oh, so I marked this order block. So I'm looking. Okay, this is potentially an order block here. Let me mark the open, and I don't want to see price come back up above the open right there. And that's why I went ahead and moved my stop down to cover. because it wasn't just going, right? Like it wasn't displacing. It was having a bit of a higher resistance. So I was like, yeah, let me cover. Let me, watch this little order block, potential order block here. Came down. Went ahead and moved my stop behind the order block. It shouldn't come back up to it. And I just kept it pretty tight. Like I just didn't love it. So kept it pretty tight. Oh, that's what it was. And it came back up and knocked me out. Got really close right here. Not a huge trade, about 35 points or so. 30 yeah, about 35-ish. See, hitting that deviation. I'm telling y'all that those deviations are so accurate. I can't make it up. Came back up, hits my stop. Oh, came down a little bit. Oh, that's okay. That's what it was. Pull my stop. As soon as it came down under that deviation a little bit, I tightened my stop up right above that deviation. And just because I was like, okay, it's whatever at that point. Got out, made almost 10 grand on it. This is just a lag from Rhythmic and Ninja when this is going. That I'm not actually still in a trade. It's just a lag from Ninja Trader. So anyways, almost 10 grand on it. Got out. That was it. So that was my trade there. And then the last thing is my payouts that I submitted. The 15K got approved. So that should be hitting the bank here any day now. There we go. 15K, April 15th, all approved. That's how you do it. Money management. Take your time. Keep reviewing. Get better and better. And yeah, anybody can do it. You just can't quit. You got to focus and keep getting better every day. So, all right, that's a wrap. I'm going to hop off of here, and I'll see y'all on the next one. As always, trade well, everybody. Take care.